Okay, hey, there we go. I don't know what was going on. Listen, I was live at 8 o'clock. I went in at 8. Something was going on with the internet or something. It was not broadcasting, but nevertheless, I'm here. My name is Keith Robertson. I am your Fin Coach. Thank you for tuning in to another episode of Unlocking Your Legacy. This is where we bring public information that a lot of times is not public knowledge. We're showing you a 4-leg table in business and in your life. These 4 things that we talk about. 1, how to increase your cash flow. Because that's important, right? More money in your household. More money in your business. Secondly, we show you how to save money and reduce debt. Again, bringing more into your household, more liquidity. Third thing, reduce taxes. Now, we do render unto Caesar what is due Caesar. We're not a proponent of saying anything that is not legal, because there's more money in the box, y'all. Because you're out there in the game, and I'm talking to you that's out there in the games that's running and thinking you're getting by. If you don't have the power of compounding interest that you able to receive from the financial institutions, what's up, Andrew? It'll be like the opening scene of Bad Boys, the rats eating the money, if your money can't get put in the bank. But anyway, reduce the tax obligation. And then the 4th thing, showing you how to move that legacy from one generation to the next in the form of protecting everything and bundling it up together, putting it in various trust instruments, so you're able to move that legacy, y'all. But again, my name is Keith Robertson. Thank you for tuning in. Listen, guys, I don't know what happened a few minutes ago. I was here at 8 o'clock. I hit go live. It said it was live, but I got a message that it won't live, but I'm live now. So let's dig in. So, okay, hey, couple things. I wrote myself some notes, so I'll make sure I stay on point so I don't wander. But listen, go to Keith Robertson Fin Coach. All right? Keith Robertson Fin Coach Facebook page. Come on, guys, subscribe. Give me a thumbs up. Give me a like. Share it. Keith Robertson Fin Coach on YouTube. That's a new channel that I'm starting where I'm going to only put economical news out there. And of course, we're brought to you by our sponsor. Of course, it's 12 Stone Consulting. Now, 12 Stone Consulting is a full-fledged business coaching firm here in Virginia Beach. So, if there's anything that you need from that 4-pronged table, make sure to reach out to 12stoneconsulting.com. Now, we want to dig in today with a couple things. I'm gonna hit the economical news first. The first thing, hey, dig this. Medicare open enrollment is going on for you that are partakers in Medicaid. Don't get caught up in the scams, y'all. Don't get caught up in the scams. There are new rules for 2025. Make sure to reach out to a licensed professional. I'm going to say like myself, okay, to make sure that you know the latest information when it comes to the Medicaid rules. And making sure that you aren't taken advantage of. Because, you know, you guys have heard about the scams that go out there in the industry. Now, I'm going to be totally truthful to you in this sense. Now, I am not representing Medicaid in this open enrollment season now. I'm going to wait until January, and we'll be doing something with Medicaid. But however, you can still reach out and get some information. Information is always free. You know, you can reach us at 757-335-6772. 757-335-6772. And I would really appreciate it if you guys would give thumbs up when you watch the video. If you feel like what we're giving you has some value for you and your family and your business, give us a thumbs up. You know, we want to know that you hear us out there. All right, let's dig in. Let's go on to the economical news first, and then we're going to jump in the show real quick, and I'm not going to be before you long. So what's happening out there economically? Okay, let's see. Well, the market did what I said the market was going to do. Now, I still haven't figured out how to share my screen when I go live on Facebook. On YouTube, and this is why I'm trying to get y'all to go to the YouTube channel now. On YouTube is a little different. But remember last Thursday I talked about the market had hit a historical all-time high, which was at 58.50. And we're looking to see if it was going to break that all-time high and continue up, or if it was going to be some type of correction. Where the correction happened. And if you were watching your stocks, watching the market, you could have jumped in because the market dropped down to 57.62, giving you the opportunity to jump back in and to ride it back up. Now it's going up again because you got to keep in mind, right? We're in that political cycle, and let me do my my public service real quick. Make sure you vote. Whatever dog you got in the race, make sure you vote. If you don't vote, don't complain, right? But the key thing is, it's not the presidential race. Well, the presidential race is key. I'm not going to say it's not. But the House and the Senate. Whoever's in office, are they going to be able to pass the bills and the laws to get them to the president with the House and the Senate? Who controls the House and the Senate is what I'm saying. So make sure you guys vote. But nevertheless, the market did. It reached that all-time high. Like I said on last Thursday, it had a correction. And it afforded an opportunity for you to get back in there to ride that election cycle, because as I stated, right now we're in the end of the year where we have the most economical stimuli typically throughout the course of the year. Again, Halloween, Thanksgiving, and Christmas. Three of the most robust retail times of the year. And this time it's opportunity to get in and get you a few dollars if you're in that market. Now, this is not investing advice. Okay, this is for educational purposes only. You know, because we're not sitting down with you. I don't know what your risk tolerances are, right? So I can't give you advice in how you should trade or how you should invest. Okay, you need to sit down with a licensed individual yourself and see what's best for you and your family. All right. Now the job claims, very interesting now, as you know, they see indicators now that the economy is slowing even more, right? The job claims last week was at actually what was it? 241,000 unemployment claims last week. Okay, this week it dropped down to 227,000. So they said that's a positive thing because it's less job unemployment claims put in, right? But aren't we going in, like I just said, the biggest retail events of the year? So they're hiring more people, right? Y'all got to look. It's not about the numbers, y'all. You got to realize you got to dig in and really pull back the layers of the onion and see what's going on out here. All right. So let's see what else. Again, inflation indicators are on the rise. Okay. Oh, here's a bit of news now. It's saying more individuals that are making $150,000 and more are living paycheck to paycheck. Wow, $150,000. If you remember, not too long ago, I said to even afford a house now, this day and time, you need to be making at least $150,000. I believe the average is about $107,000 to be able to afford a house at the medium value rate now. But then you have also the credit card household debt is above $7,000. The average household has at least $7,000 in credit card debt. So we're looking at the economical trends that are out there. You know, you're going to hear them talk about how strong the economy is and how robust it is as far as the economical stimuli, because what the economists will do when they put in their projections, if they over project, the next month they'll back the numbers down, so the following month they can look like they're more spot on, right? But that's just a numbers game. Now Bank of America, they're saying in 2025 they're estimating about a 13% increase So they're expecting some type of economical stimuli in 2025. Now it may be that there are a lot of commercial loans that are coming due in 2025. That could be the situation that they're projecting that in that number, because in the past 120 years, typically Bank of America has been seeing about a 6.5% increase on an average. But they're saying 13, almost double the growth. Wow. Well, the economic growth is usually about 3.5 to 4%. So, listen, guys, these are just numbers. And the only thing that I'm trying to get you to see is that what you're hearing in the news and seeing in the news a lot of time is not real, because you got to realize not too long ago we had that economical stimuli pushed into our economy. Trillions of dollars. Remember those stimulus checks? Remember the stimulus checks? Trillions of dollars that was pushed into the economy. We still see that trickling through, especially the municipalities, because it took time for these local governments to receive those funds, right? It took them time to receive those funds, and you may see things going on in your area now because that municipality stimulus, economical stimulus, is hitting your communities, and you see it. Well, listen. Okay, Tesla, woo, Tesla. Anybody out there with Tesla stock? Tesla saw they beat their projections by 12%. Tesla did. Well, I'm glad I got some Tesla stock, y'all. Like I say, you can run a Robinhood. You can put $5, $10, $20 in Robinhood and buy some Tesla stock or some of these other stocks, and just see how your money can increase. You know, dollars, pennies make dollars. I'm just saying, you know, oatmeal is better than no meal. So these increases, we can see those, y'all. What else is going on out here? I hit the economical cycle that we're in as far as Halloween. Okay, I hit that. So let's dig in, guys. All right, so, you know, a lot of times people have a tendency to like the new shiny thing, you know, that thing that glitters. And right now, it's to talk about infinite banking. You know, it's the IUL, the index, universal, life, contract. That's right. It's a financial contract. Insurance policies are financial contracts. They're telling me again, check my internet connection. I must be talking about something they don't want me to talk about, or something, because I've never had this. I had it one time before, but let's keep it moving. So when we look at an IUL, what is an IUL really, right? When we look at the Index Universal Life Policy. Well, you know, as I've stated to you, it's attached to an index like the S&P 500, but it's not like the stock market when we're looking at the chart, right? It's not like it's operating on a daily basis or a monthly basis or a weekly basis, and it goes up and comes down. It's from a point to point. Right now, if you were to get into an IUL, it would be based upon your gains or your losses would be based upon October, right now 2024, to September 2025. And it will be viewed to see, on an average, was there an increase in the index or a decrease? Now, the benefit is that the IUL has a floor. It has a floor. So when you come in, you create a floor. Sometimes the floor can be floor plus, so you know you're going to always win, potentially. But that floor is in place, so on that point-to-point system, when that index goes up or it goes down and it's red at the end of that 12 months, it's based upon that floor. And if you have gains, you can participate in those gains. But you can only participate in those gains to a certain percentage, depending on your contract. Or if it actually had a loss, you're not going to realize the loss because of the stop or the floor. But the thing that I want to bring forward, because I've explained that before. But I just want you guys to be aware of this one thing. When you're sitting in front of a professional and they're talking about the IUL, and they're showing you your projections, make sure you understand that it's only a projection, because it's based upon going back about 50 years, and if you had that IUL at that time, this would be the return. So what I'm saying to you is that when you're looking at these projections, don't look at the best case scenarios. Those best case scenarios, a lot of times, they may be showing you 12, 8, 10%. You want to see what 6% looks like. You want to see what 4% looks like over time. Because the IUL is not all, let me say this. All IULs are not created equal. Let me just tell you that. A lot of them have a 10-year surrender charge. So that means that the cash that you put in and the cash value that it accumulates, if you pull that money out in that first 10 years, it's a significant charge that does not make it advantageous for you to pull that money out. So a lot of IUL policies aren't structured for the quote-unquote infinite banking. You got to understand that. You need to sit with a professional that understands. Because again, a lot of people don't even explain a lot of times how cash value is created from an IUL or any insurance policy. Let me do that real quick. Your premium comes in, then there's fees that go out. Okay, the cost to have that policy in place. Then that remainder, in the case of an IUL, the insurance company actually buys options. Now, options is a whole different beast. That's getting into some deep cotton. We're not getting into what options are. But typically, options, either you win or lose. There's no gray area with an option. But then, at the end of that time, you get, in the index, you get credits to the gains from those options, and that is where the cash value comes from in an IUL. Now, the truth of the matter, I'm not going to say the truth because it's not about someone not informing you, because I'm not sitting beside you, so I don't know. But I hear a lot of guys out here on the internet not actually explaining options properly. But when you look at an IUL, you have to make sure that you look at it from the standpoint, if it was to bring the minimum return, would it be something that you would buy? The IUL is a long play in many cases. It's great for retirement funds. Over a period of time, I've shown you guys about the $1 Million Baby policy and how a lot of wealthy individuals, when they think about a baby being born, they will put an insurance instrument on their child like an IUL. They help them through their life. But see, that's the long play. That's the long play. And so keep in mind when you hear people talking about infinite banking, that IUL just may not be the best product for it. Now, let's talk about infinite banking. What is infinite banking? What is infinite? Infinite is that number 8, right? Continuous banking. It doesn't stop. Right? It doesn't stop. It's infinite. And the insurance tool that's used for that is a cash value, cash accumulating insurance policy that's structured properly and funded properly, that's presented by a mutual insurance company that pays dividends. Of course, now it's a fixed return that you get on that. You're gonna at least get whatever that fixed return is, and then again the premium comes in. Here's how the cash value builds up in this specific instrument that I'm telling you about, which is the cash value policy, right? Not an IUL, just a mutual company cash value. So you have your premium payment that goes out, the fees of the cost of insurance, then the remainder is invested. Now, what happens here is it's invested in bonds and other various investment opportunities that the average person would never get an opportunity to participate in. will never get opportunity to participate in. When you look at trying to structure your investment portfolio when it comes to a fixed return, it's very difficult. And so why not put that money in an insurance policy and structure it where you have these 5 things. 1, you can dump your capital in it. You can bring in large sums of capital and put into these accounts. Okay? And give me a call, 757-335-6772. And we can go over it. I'm just giving you the high level overview of it. You're able to put money into it. And of course, it's based upon what type of income you have and things of that nature. There are other guidelines around that, right? That's one thing. But it has cash value realized in the early years. Like I told you in the IUL, it may be you don't have access to cash value a lot of times in the first 10 years. But in this cash accumulating policy that I'm talking about, you have access to cash value relatively quickly. In many cases, within 15 days of putting it in there. Now we're going to talk about how you use that money here in a second. All right. Now, access to that cash value is the third thing. You having access to it. And let's use a real example. Let's use a car, for instance. When you buy a car, you go in and you see a car that you want, then you're going to finance it. You're going to go to your bank, credit union, or finance company, and they're going to give you some terms for purchasing that vehicle. Now, what's going to happen is they're going to give that car dealership that money. You're going to take that car, and then you're going to pay back that financial institution, right? Each month, you're going to pay a principal payment and an interest payment until you decrease the balance on that loan down to 0. And at that point in time, you get the title of your car and everything is cool, right? Okay. So infinite banking works like this. Now you've accumulated cash value in this policy, right? Because it's structured properly, it's funded properly by a mutual insurance company that's paying dividends, right? You pull cash value from your insurance policy to pay for the car. Now, the way that it's done is that it doesn't actually come from your cash value. Let's say you have $100,000 in cash value, and you want to borrow $30,000 to purchase a vehicle. Okay, you borrow that cash value, but it doesn't come from your cash value. That cash value comes from the insurance general fund. The insurance company uses your cash value, right, as a guarantee for that money that they're giving you out of the general fund. And so what does that do for you? It allows that compounding interest of that cash value to continue. Because remember, again, life insurance, and this is a whole life insurance with cash value. This policy is geared to be there for your whole life, that's going to pay a death benefit at the end. Life insurance is not like health insurance, car insurance, home insurance, because you may have an accident and need to use your health insurance. You may have an accident, need to use your car insurance. You may have something to go on in your house and you need to use your home insurance. But everybody's going to reach the end of their existence here in this plane. We all gonna see death face to face one day. So we're gonna make sure, so the insurance company knows that sooner or later, if you don't pay that money back, they will take it from the face value of your insurance policy, because the way that it's structured, your cash value will never be more than the face value of your policy. And it can't be to continue to be reviewed under the tax code as an insurance policy. But let's go back to how the infinite banking works. So the insurance company gives you that money. You typically get it within 5 to 10 days, and it's just transferred right into your account. Then you go ahead and you pay the dealership for that car that you want. You say, okay, well, what's the benefit? Okay, so the insurance company gave you that money, but that money is going to be at a 4 to 5% interest rate. Now, what you're going to do, you're going to pay that money back, but you're going to pay it back. You can pay it back at a reduced interest rate, or what I recommend is to pay it back like you had gone to the bank. And the bank is what, 7-8% interest rate for cars now? Pay that back into your insurance policy, but you're paying it back to yourself. You're paying it back to yourself. You're increasing the cash value in your policy. You're still paying your monthly premiums into your policy, as well as paying your your car payment back to yourself, increasing that compounding interest. You're making money. It's a money machine. See, you are a money machine. That's right. You're making money, and insurance policies are used to protect you as the money machine for your family. So you're paying yourself back. But what is the benefit? Well, for one, because you went and paid cash for the car, you get the title right away. You get the title right away. Okay. That car is not on your credit report. So if you're doing any other type of financial transaction where debt to income is being considered, it's not going to be calculated in your debt to income. You pay yourself back. And then, now keep in mind, the cash value, when we talk about infinite banking, we're not using it to buy groceries. Right? We don't have emergency funds for that. We're taking advantage of investment opportunities. Because you got to keep in mind, right? If you have, okay, you say, oh, I got stocks and bonds, man. I got houses. I don't need that. So let's talk about it. Excuse me. Let's talk about it real quick before we get out of here. If you have money in the stock market, like we were just talking about, you have money in Tesla. Tesla had a win in Tesla, had a windfall. Now, I'll tell you a story. Remember GameStop? GameStop. When that stock started to go up, there was an opportunity that a lot of people saw. Excuse me. That a lot of people saw. This one particular gentleman, what he did was he went in, his cash value and his insurance policy, he saw GameStop go way up. He knew that was an anomaly. He knew that was what we were calling a pump and dump, where you have you're not going to say financial institutions, but a group of individuals would come and put a bunch of money into a particular stock. I'm thinking, I have water, I think. And it would push that stock up, push it up in price. Because a lot of individuals are followers. When they see that stock going up, then they want to be a part of it, right? So other individuals get in, they begin to buy the stock. And so GameStop continued to go up. So this one guy looked at it, he said, that's not going to last. He understood that was a pump and dump. So he pulled money out of his cash value in his insurance policy, and he bought an option, right, that stock was going to come down. He wound up winning. And when he got his proceeds, he paid that money back. See, because you have access to that money. When you have money in the stock market, the only thing that you can do is sell the stock. Whatever the par rate is at that time, sell the stock. When you operate in infinite banking with the correct vehicle, you have access to your money. You have access to be able to take advantage of those investment opportunities. When you have equity in your home, you have to go through a process, right? You have to go through a process to pull that equity out, whether it's a line of credit, right? Or you're just doing a refinance. You're looking at least 20 days at the best banks. And I'm an underwriter by trade. I'm telling you, at least 20 days. When all the I's are dotted and T's going across the finish line. At least 20 days, but typically more 30 to 45 days to get it done. But when you have those funds in the correct vehicle, right? You're able to operate within the infinite banking. Not to mention, what if a family member needs some money? You want to do a business. You can pull money from the insurance policy. Now again, you pay it back. You pay that money back into that policy, because that is the fruit from the tree. When you don't pay it back, you're eating your seed, so you can't continue to plant. Even though at the point in time of your demise is going to come off to the face value of that policy, right? As I stated, but it's going to be minus that loan. All right, because again, we're putting everything into the trust, and as I talked about trust and being able to move your legacy to the next generation. So these are the things that I want to talk about today. I wanted to talk about the IUL, and let's go back and revisit this real quick. I want to go back and talk about the IUL. Make sure when you're sitting down with your advisor and you're talking about an IUL, or you're talking about any type of insurance product, make sure you understand how it works. Because you got to understand, what are your risk tolerances. You know, if you're conservative, possibly an IUL is not for you. Right? You need something like the whole life policy with cash value from a mutual company, like I stated, that pays dividends, that's fixed and safe. In infinite banking, it's a cash value insurance policy, an insurance contract with guaranteed returns from a mutual insurance company that pays dividends, that has immediate cash value access, right? An increase, a high value cash value product where you put money in and you're getting the cash value almost immediately. You have access to the money. And this reduces your economical costs when it comes to money as well, y'all. And you're able to pass it along to the next generation. So these are the things that I want to talk about today. Hopefully you got something out of it. I don't know. If I get a thumbs up on this, okay. I would really appreciate it. You know, like and share this information. Reach out to me, 757-335-6772. 757-335-6772. Let's have a conversation. You know, because listen, y'all, especially young folk, get the insurance now and get things put in place so that when you get older, you don't have to work. You don't have to work for your money. Your money is working for you. You know, get with an advisor like myself. Again, increase your cash flow. Saving money, getting out of debt, reducing your tax obligation, and showing you how to move your legacy to the next generation with guidelines within that, so the next generation will know how to move it to future generations. But in any case, guys, listen, I want to thank you so much for tuning in to another episode of Unlocking Your Legacy. It's been a blast, like it always is. I'm your host, Keith Robertson. I thank you so much for tuning in. And hopefully, I'll see you next week, next Thursday, 8 o'clock, same channel, same time. Like and share, y'all. Peace and blessings. See you next time.